And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Tuesday, August the 23rd. I'm John Hoagland. Thanks for trusting me with your time. End of the month. Always have to remember these because it's an option expiration, and if there's some options that are uncovered or short, there may be some volatility near the end of the day in some of these equities. Keep that in mind. But as always, we're going to be looking for accurate context, good risk management, and infinite patience in our trading today. I hope if you're in the markets already, you've got things going on and going your way, I should say. We did have some economic information come out just now. The Case-Shiller and FHFA housing price index came out. Let's take a quick look and see how those came out. Somewhat innocuous. The S&P HPI composite a little bit higher than expected, but we are still waiting for more information in the Chicago PMI at 8:45 Central and 9 o'clock Central, the consumer confidence numbers. Probably the biggest number for today. Don't forget, the rest of the week, there's a big focus on employment. Just taking a quick look, tomorrow ADP employment, the jobless claims as usual on Thursdays, and then the big unemployment number on Friday. So lots of data yet to come out. And usually I would say that it might mute activity a little bit, but this being the end of the month, anything is likely and will happen. As far as other things going on in the world, we've got equity futures to open steady to lower after the S&P and NASDAQ posted new highs yesterday, as well as in the overnight session again last night. The U.S. and Europe moved to tighten travel restrictions on each other as COVID-19 numbers continue to rise in both sides of the pond, if you will. Crude prices remain range-bound, indicating the Hurricane Ida probably had no lasting damage to Gulf oil production. We're waiting for API this afternoon, and of course the EIA petroleum status report tomorrow. Taking a look this morning at the VIX, it's up 3.4%, but still not a very big number. It had a little bit of a break yesterday as we were putting in new highs in our equities. 1673 last I looked. Yesterday morning at this time it was 1675. So really largely unchanged from where it was yesterday. The dollar index off slightly, 92.46, continuing to slide off that 93 number, and the 10-year yield 1.29% yesterday. At this time 1.3%. So a little bit of a continuation of perhaps a downward tilt in yields, probably aided by Chairman Powell talking about how the fact that whatever they do with easing of buybacks, they're not going to kind of directly relate that to any changes in rates in any time soon. So we're looking forward to another trading day today. As always, got to look and say hello to everyone every morning here. Ed Nelson, first one in the room. Have a blessed day to you. You win the prize. Tim, Bill, Brett, Steve Lee, Jimmy Decker, Daniel Jardan, Hardan, Brian, Ryan Williams, George, Joseph the Future Scalper, Cesar, Tone, good morning, Zorain, Jim, Drones over Texas, good to see you. Yes, the final countdown. Maybe we should use that song for the opening of the market forecast here, right? Jerry is awake. Hopefully John is too. Hopefully we all are, right? We got to be at our best when we are trading. Cameron, good morning. Prophet Eon, good morning. Good to see you. Keith, Greg, Janus, Vince, good morning. Laura, good morning. George, Nelson Benitez, good morning. John, a question. Someone used the Delta indicator in TradeStation. That I don't know. I'm not that familiar with that platform. I would dig around, just start poking at things, at least things that don't create positions for you. And you can always, I think, contact or go to their. I think they've got a wiki for their platform. Maybe we can find it in there. Sup NM, good morning. KM, Emanu, good morning. Juan, good morning. Robert S, good morning. Durones over Texas. Huh. Here you go. The final countdown, yes. April, good morning. And Ryan Williamson. They are going to drop the link for group coaching in tomorrow. Make sure you get signed up and email in your questions. If you don't email in your questions, you can ask them right on the fly. Of course, we're going to be answering any that we can possibly. Nobody knows everything, of course. I don't claim to. There's something we don't know. Maybe we can learn together. It's one of the things I like so much about group coaching on Wednesdays. Next week, we're going to be adding some education opportunities, perhaps, for some of you. Kind of more pointing towards newbie traders and maybe some traders with some experience. It's going to be 4 weeks, 4 days every week of a chance to look at some of the content, the how futures started, the contract, some basic technical analysis, some basic psychology, all kinds of good stuff over the next 4 weeks, beginning Tuesday after Labor Day. I will be presenting these. They'll be at 12:30 every day. On Wednesdays, we're still going to be having group coaching. We'll just kind of go straight from the content and questions from the futures. We're calling it kind of futures 101 through 401, 4 weeks. First week 101, but after the Wednesday session, we'll be going straight into the group coaching session. Really looking forward to seeing it. Anybody that wants to be there is welcome to be there. We'll be sending out the link probably on the. I think we'll be mentioning it at least on the weekly kickoff. I'll be dropping the link in here during the forecast, and Dan will be doing that on the recap. So we'll be looking forward to seeing how this goes. We're looking forward to and continuing to increase the education opportunities here at Top Step. So Jerry is awake. The School of Stock. I like that. That's very, very good. Hey, I had a friend of mine trolling us yesterday. He's a friend of mine down in Table Rock, Missouri. I got a call from him yesterday. I got to call him back. But if you're here today, Goni, say hi. Let us know you're here. And we're going to jump into the charts right now, as usual, starting with the daily and crude. And let's see what we've got going on. Okay. We're seeing volume and open interest look good, but there's some signs that this rally is kind of falling off here below this 69.80 weekly kickoff high to $70 area. Are we getting a little bit too long to rally? We've had more than a 10% move off of our recent low, with expectation of perhaps production problems with Hurricane Ida in the Gulf. Doesn't look like there was any damage, so we should be returning back to normal production very soon here. So my thought is this market too long to rally? We've got these two moving averages. This is the Hull moving averages that I look at on multiple time frames. It's a 9 session is the red one, and the blue is 13 session, and we're starting to see them curl over. We may even see them cross over today. The last time we saw this crossover in any meaningful way was up here. We had a pretty decent move to the upside. We got the crossover, and shortly after that, the market started to pull back. When we look at this just, overall, we are putting in lower highs and lower lows. It looks like we're putting in another lower high today. So I'm starting to think that the market has been getting a little bit too long for its own good. Sometimes even if a market is going to continue higher, it gets too long to rally. We need some sort of consolidation or some sort of correction to even out inventory to help the market move even higher if that's the case. We, of course, never know that. We added, believe this, 11,600 in open interest. Blood starting to come back in. Is this new longs? Are these laggards to this level up here? It's starting to kind of feel that way. Of course, we don't know for sure. So today, so far, we have an inside extended trading hour range. Our range from last night is inside the entire session from yesterday. So one indication that the market is perhaps losing a little bit of upside momentum. That boost in open interest yesterday is like, okay, we just finally had a whole bunch of new buyers come into this market, but against an inflection level that looks like it's going to be a little bit hard to get through, right? So those overnight longs might be, or excuse me, these longer time frame longs might be looking a little bit of an area here that they might be starting to sweat it a little bit. Take a look at the 30-minute chart here. So I'm going to try and get it so we can see some of the activity to the upside here. Now, it's been relatively organized. I mean, we do have a naked point of control, a gap down here, and another naked point of control here. So there are structural weaknesses down below here in this move to the upside because it was a relatively emotional move. There was a lot of concern over production. Of course, we're going to have that. So, a pretty decent increase in open interest, was unable to take out the overnight high, unable to trade the overnight low. So we settled pretty high here yesterday. Settlement was 69.21. Most of, I would say, our overnight activity was down below that, and I think we're a little short in short time frame down here. So if we can get the short time frame sellers a little bit nervous, they may bring price back up to higher levels, which might give some relief to some of our longer term longs. We've just kind of surpassed our overnight low with some pretty swift rejection. I mean, this market is 13 minutes old as far as the regular trading hour session. We've had a pretty good look to the downside, experiencing some rejection down at that level. So if we get another opportunity down here, that might be an interesting spot for an execution. So there was no gap. Looking to reject value from yesterday. If we start to reaccept value from yesterday, that might be just enough to take these overnight shorts and get them a little bit nervous. I'm thinking the longs may start to feel the pressure, longer time frame longs, at this naked point of control here around 67.90. Short time frame shorts, if nothing happens, that's when they're going to start to get nervous and pull price back up towards higher levels with which to perhaps look for opportunities to short. We're still got some space above here till we get to weekly kickoff high, and this looks like a pretty stiff area for the market to try and get through. Not looking very much like we've got a high probability of getting there today, but we never know. Anything can and will happen. Take a look at the take a look at the S&Ps now. So, it always just looks this way. Bottom left to top right, at least for now. New all-time high in the extended trading session, the overnight session, I should say. It tests weekly kickoff high, 45.40 is weekly kickoff high. We looked a couple of bucks above it last night and found some rejection. Yesterday, pretty low volume, was about 5% lower in New York as well, but that doesn't surprise me. The upside doesn't tend to bring big volume in the equities. What I'm liking is the fact that we added 10,000 in open interest on this up move yesterday. And so far today, well, in the extended trading hours, we're overlapping to higher in range. We've got our hulls still pushing higher, so the momentum is not necessarily showing signs of tiring just yet, but I'll be, of course, watching this 54.40 level to look at a potential resistance, which allows me to limit risk. I'm always about risk limitation, right? So in yesterday's activity, we suspected that we saw some longer time frame buying in the fact that the price was moving higher and delta was moving lower. Now, that was supported by open interest, of course, adding 10,000 contracts. But again, volume was weak. When it comes to equities, no news is good news in the equities. Don't forget, though, it is the last day of the month and anything can happen. Here's the 30-minute chart. Here's that push to the upside. Here's what we were talking about as far as delta is concerned. You see price moving higher, and you see the more aggressive traders hitting bids with market orders. Usually you would think that should push price lower. Yesterday, it did the opposite, and we added 10,000 in open interest. That tells me that there were legitimate longer time frame buyers possibly present in yesterday's activity. When price moves opposite delta, it's usually stronger money doing so. Last night, we put in another all-time high in the overnight session, right up against a resistance area. The market's going to open. It's going to open in range, perhaps below value. We reaccept inside of value. That's going to improve the probabilities of us taking out that overnight high and giving us a test of this weekly kickoff high. All right, so we don't have a gap. We don't have any overnight inventory. Settlement is right here, 45.25 and a quarter. We're going to be opening right there. There's no overnight inventory. So that's going to leave us to continuing to see what the longer time frame, what the shorter time frame. Let's see what they do. Usually in this situation, I'm going to try and stay very patient and wait for a trade to come to me. There's very little change in the perception of value of the S&P index on the open today. We got to look for some sort of change to happen to find better and bigger opportunities. As far as our move to the downside here, we can see our whole moving averages. The 9 session is now holding an upward tilt, and we've had our crossover. So this can be an indication in short time frame that the momentum to the downside is falling off. We got a little bit perhaps long here at the all-time high. We got out of those. Are we a little short here? Is it enough to really mention? But if we come back open and then accept in value, that could give us a bigger, higher probability of another test up here at weekly kickoff high. But I am suggesting, as always, infinite patience. I know it's tiresome to hear that all the time, but it's one of the most common things I tell myself. If I start to get excited, I got to go, all right, calm down. What's the real situation here? What is the sitch? The NASDAQ, big open interest boost in the all-time highs, adding 6,500 in new business to the upside. That to me is a positive. That's a healthy thing for the upside auction. Volume not that great, but that doesn't surprise me. In the equities, the volume doesn't necessarily jump whenever we have an upside move. The NASDAQ is presenting as the strongest of all the equities. We've got Our weekly kickoff high looming just above 15,710, kind of creeping up on it like the weekly kickoff high in the S&Ps. So, well, let's take a look here. Let's go to the 30, see what we're seeing here. Okay. So again, no real overnight inventory. It looks a lot like the S&Ps, except for one thing. The NASDAQ is presenting as stronger. It is going to open, more than likely, it's going to open in acceptance of value from yesterday. The S&P is likely to open below value from yesterday and try and work their way back into it. The NASDAQ's already accepting, and again, with price so close to settlement, there's very little change in the perception of value. All new all-time high, again, in the overnight session. We've got a little bit of a gap that we left yesterday. We've got, point of control that remains unchecked, and that's going to be important when it becomes important. There's always the risk of repair when there's an emotional move like this. As long as we remain supported by value low from yesterday, I'm not going to be concerned about that. All-time high in the extended trading hour session. Not ready to open here just yet, but opening in range and in value does suggest patience. We are at all-time highs, and it is the last day of the month. Anything can and probably will happen. Take a look at the gold. So we're still holding upside structure in the medium time frame. Downside structure in the longer time frame, we've kind of taken a look at breaking that. Okay, last Friday, we broke out on good volume and open interest. Yesterday, we extended that, couldn't maintain higher pricing above last week's high, and we did lose 2,700 in open interest. So a little bit of perhaps long liquidation, and that long liquidation is going to probably remove some selling power from the marketplace. We're getting an opportunity to come back down here and look at this 1807, 1809 level that is last week's kind of important inflection level that we broke out above. We're back down here testing it now. I was looking forward to an opportunity for this because I believe that it alleviates risk. Our overnight, we got a little bit deep towards this trend line, but that's not a bad thing. That gives us an opportunity to look for longs while limiting risk. That's the whole thing. Take a look at the 30-minute. Lost 2,700 in open interest. Again, I think I mentioned that already. Long liquidation. So we have the settlement right here, which is 1812.20. We didn't really have much in the way of overnight inventory. If there was anything, it was long. Our opening range was the high of the regular trading hour session, 1816.20. This zone here in this gray line represents that area yesterday or last week where we were kind of looking at as resistance. Now we're kind of looking at it as potential support, but we've had a pretty steep move down below that level. And if we accept down below this level, then I think we fall into repair from yesterday and perhaps even points lower. So this is a pivotal area for us today. Opening range, the high of the session. If we come back and take this out after reaching down to this level, then I think the game is back on to the upside. Let's take a look at the euro and the 10-year, and we'll get down to business. All right. So dollar continues to slip to the downside, and our euro continues to slip to the upside. Yesterday's volume was weak, but there was a pretty good boost in open interest on an overlapping to higher range and extended trading hours. We added 2,500 in open interest, buying still coming into this market. And where am I? We've got a weekly test, a test of the weekly kickoff high here in the overnight session. I'm looking forward to that opportunity to see that again today. It gives me the opportunity to limit risk. Take a look here, 30-minute chart. We had a pretty big overnight inventory to the upside. Settlement is all the way down here at 1807, 11807. When we talk about overnight inventory, it's how far price goes away from settlement in the overnight session. Price took us right to an important inflection level. It rejected it once, rejected it twice. The market opened. It left the opening range at the high of the regular trading hour session, and the market is now unraveling all of those short time frame long positions that occurred overnight. These are not traders that are going to be taking these positions home or holding on to them very long. So you can see them getting out already, which gives us an opportunity to see if we can close the gap from yesterday. If we can't close the gap from yesterday, we should put some sort of base just short of that, and that might give us the opportunity to have a move and get us back up to another opportunity to see this market at weekly kickoff high. Sometimes the overnight inventory tricks traders into thinking that's the new trend for the session, and quite often they end up short in the hole as the market turns and then continues the move to the upside. Opening range trade, 1842.5 was all the way up here. 42.5 was the 720 open. That's the high of the session so far. Not looking for shorts. Not looking for longs until we get to some sort of structure, which may be the inability of this market to close this gap, if that is the case. And the 10-year. So we talked yesterday about this market really kind of falling into short time frame control. It's very centrally located in weekly kickoff range. It's settlement day for the September contract. And again, we've got some potential equity volatility due to end of the month. But I'm not looking for anything big here. We traded the market. We tested last week's high in the overnight session. We did lose 118,000 in open interest. Again, that's a function of rollover. It's not everybody leaving the 10-year. We've got an overlapping to higher range, and last week's high is in play for today. We looked at it in the overnight session. We had maybe some overnight longs that have already reconciled. Settlement is right here, 133 and 17 seconds. We're in range. We're in value. No real reason to try and jump into anything right off the bat here. I'm going to just let this thing settle. I'll certainly be looking at opportunities at last week's high. Our current low is value low from yesterday. It looks like a decent opportunity, although it doesn't look all that strong. There's 3 attempts to get down there. And this is kind of a short time frame level. If it works once, they're going to do it again and again until it doesn't work. So I'm just not all in that groove here with the 10-year at this point. A little bit on my back burner. Okay. So I've yammered on a little bit long again today. We've only got 1 minute before the equity open. When it gets to a weekly kickoff high, I look at that as a resistance level, and I look at it as an opportunity to limit my risk. If it gets too much through it, it might be telling me that the rejection that I'm looking for there is not going to happen. Fred. Well, all right. I've got some comments here, but the one thing I do want to add here is this is where I find open interest. Now, if you have questions about this, come to the group coaching session and ask about it, and I'll show you how I collect that information. But this CME Bulletin has all the information of all the contracts, volume, open interest. Anything you need to know is on that list. Okay? So, and Well, I got to get down to business here. We just had the equity open. I'm going to take my deep breath. Stay humble, grateful, and creative in your trading today. We'll see you at the coach's playbook, and then Dan should be available for everybody for the market recap. I'll see you for the coach's playbook. Trade well today. Get out there and profit. I'll see you in the pit.